Hi everyone, welcome back to this week's Technical Insights. Last week was a week full of big earnings reports. In the US, we had a monstrous day as Nvidia shares roared on a strong quarterly results, leading the chipmaker to briefly surpass a 2 trillion valuation. On Thursday, the S&P 500 index had its best day since January 2023, while the Nasdaq Composite Index popped nearly 3% for its best session since February 2023 as well. In Singapore, we also saw earnings report from a few major STI constituents like SIA, UOB, Genting Singapore, and Singtel. Some of those earnings reports disappointed the market expectation and analyst consensus, like Genting Singapore, whose share price shed close to 10% after it delivered a weaker than expected fourth quarter results due to an unforeseen surge in bad debt losses. This was because of the company's conservative accounting policy, where the bad debts are recorded if payments are not received within a specific period, irrespective of the potential of future collection. Before we go further, let's recap how the markets ended last Friday. Straits Times Index fell 1.18% or 38 points to 3,184 points on Friday. Losers also outnumbered winners 326 to 252, with about 1.3 billion worth of securities being traded. In the Asia region, market mostly ended in the green. Japan Nikkei 225 index rose 2.19%, while the Shanghai Composite Index gained 0.55%. Hong Kong Hang Seng Index meanwhile shed 0.1%. On the US side, it was a shorter trading week as last Monday was a US holiday. The S&P 500 inched higher by about 2 points or 0.03% on Friday. In early Friday trade, the broad market index broke above the 5,100 points level for the first time and hit a high of 5,111 points. The Dow Jones Industrial Average added 62 points last Friday, or about 0.16%, also reaching a fresh record and closing at an all-time high of 39,131 points. Nasdaq Composite Index, on the other hand, lost 45 points or 0.28% to close at 15,996 points, 4 points short of the 16,000 handle, but did notch a fresh 52 weeks high at 16,134 points in the early session trading on Friday. So a bit of profit taking there on the Nasdaq Composite Index as traders locked in their profits. On the weekly view, all three major US indices returned to their weekly wins, a trend we are seeing since the beginning of the year. Most of that jump happened on last Thursday when Nvidia surpassed a 2 trillion market capitalization for the first time ever. During intraday trading on Friday, the chipmaker earning fueled rally stretched into a second trading session on Friday. Nvidia shares rose more than 4% during early Friday trade, building on more than a 16% surge last Thursday following another blockbuster quarter and earnings guidance. The Dow is up 1.3% for the week to end at 39,131 points. S&P 500 advanced 1.66% to end at 5,088 points. Tech-heavy Nasdaq Composite Index gained 1.4% last week to finish at 15,996 points. A check on the Momo stock screener function, Nvidia has surpassed Amazon in market cap and is the third most valuable company in the US now, just behind only Microsoft and Apple. Google parent Alphabet, Meta Platform, Tesla, Broadcom, and ASML Holdings make up the rest of the top 10 largest market cap companies on the Nasdaq Composite Index. Clearly, in the US, everything is front-loaded into the technology shares and a strong rally in the semiconductor stocks. Other chip makers have also rallied alongside Nvidia. Micron Technologies added 9% for the week. Marvell Technology, Broadcom, as well as AMD are up more than 4% each last week, and Candace Design System jumped about 6%. Jumping back to Asia, we return back to a full trading week after the CNY holidays. The Hong Kong Hang Seng Index managed their third consecutive winning week, up 2.36% to finish at 16,722 points. China onshore equities surged on market intervention by the Chinese regulators. China's CSRC denied a media report that it imposed a trading curb on net selling of stocks during the opening and closing of the trading hours. They added that the recent exchange measure against the abnormal trading patterns are part of market supervision and not intended to restrict selling. Equities in the mainland browse took a breather from the 40-month low in January, while an official report showed home prices fell at a slower pace. Hong Kong Hang Seng Tech Index also advanced 1.71%, following last week's gain of 6.89% to end the week at 3,399 points. China market sentiments are slightly improving for now. Some investors who were firmly bearish on the market before the Lunar New Year are now beginning to turn bullish. Our benchmark STI index missed the global rally in computing chips and AI as STI earnings results disappointed market expectations. SIA Q3 net profit came in 15% below consensus, and UOB missed both Q4 and full-year profit targets due to a one-off Citigroup integration expenses. Genting Singapore shared close to 10% due to disappointing fourth quarter results, and Singtel Q3 profit fell 12.5% to 465 million due to higher net exceptional loss in Airtel foreign currency bonds and Optus nationwide outage last November. For the week, the STI is down 1.15% to settle at 3,184 points. For this week's technical analysis, let's look at local bank UOB and Nvidia, whose biggest single-day market cap gain overshadowed Meta historic gains just registered 3 weeks ago. First, let's take a look at UOB. UOB reported their fourth quarter result last Thursday. Their net profit for the fourth quarter rose 21.8% on higher net fee income and other non-interest income. This included a 94 million one-off expenses for Citigroup integration costs after tax, which was 35% higher than the 70 million recorded in the same period the previous year. UOB also paid a one-off stamp duty of 176 million. The earnings missed a 1.5 billion consensus forecast for the fourth quarter in a Bloomberg survey. If not for the one-off integration expenses, core net profit would have been in line with the projection. UOB board has recommended a final dividend of 85 cents per share for the half-year period. This brings the full-year dividends to $1.70 per share, representing a payout ratio of about 50%. The dividend will be paid out on May the 9th. After the book closure on April 29, UOB said its scrip dividend scheme will not be applied to the final dividend. Last Friday, UOB share price dropped about 25 cents or 0.88% to close at $28.25. For the week, the stock lost about 3.22%. Looking at the price chart, UOB share price hit a high of $29.68 last Wednesday before their earnings announcement. The share price sank after that on Thursday after their results disappointed market expectation. Close to the recent high of last Wednesday at $29.68, we also see a double top formation on UOB price chart at the level of $29.40, which were the July and September high last year. The double top formation was a strong resistance level, hence when it was challenged last week and the earnings results did not match up, UOB share price dropped more than 3% for the week. The price now has fallen below the 20-day moving average in white over here at $28.55 and is now using the 50-day moving average, the amber line that you see here, at $28.24 for a support. Both the MACD indicator and the RSI indicator are showing signs of further pullback, with the MACD indicator turning negative last Friday and the RSI crossed below the 50-point neutral mark as well. The next few levels of support will come in at the 100 days moving average in blue, which is now at around the $27.92 level. And next would be the 200 days moving average level at $27.84, followed by the lower bound of the Bollinger Band at $27.70. Next, let's take a look at Nvidia and how their blockbuster earning last Wednesday has impacted the price chart. The share jumped 6% in extended trading following the announcement on Wednesday. They earlier closed at $674 in New York, leaving them up about 36% this year. The following day on Thursday, the stock rallied another 16%, and Friday, it rose another 0.36%, ending the week at $788 before dropping slightly in the post-market. Nvidia posted $22 billion in revenue following its fiscal fourth quarter, a 265% increase from a year ago, and above the $20 billion expected by analysts. Net income was $12 billion, up a staggering 769% from the $1.4 billion last year. Nvidia said they expect $24 billion in sales in the current quarter, surpassing the $22 billion expected by analysts. The outlook extended the winning streak of Nvidia, shattering expectation thanks to the insatiable demand for its AI accelerator, the highly priced chip that crunches data for AI models. Looking at Nvidia price chart, we notice a double bottom forming this year with the pullback observed on 6th of February as well as the 21st of February at US $663 and US $662. On both occasions, price rebounded once it tested the $663 level, indicating that there are strong buyers around this level. With the recent pullback on the 21st of February, it also tested the 20 days moving average, which is the white line that you see here, at $674 on that day. With the strong uptrend, the 20 days moving average will continue to provide the support for the rise in Nvidia share price. The MACD indicator turned positive again last Friday, signaling the resumption of the positive uptrend that we have been observing so far this year. The RSI indicator hit a high of 85 points this year on the 5th of February. The latest RSI reading last Friday was 73, indicating possible further upside with a strong uptrend momentum reading at 73. In a strong uptrend, the RSI would usually trend above the 50-point neutral mark and towards the top side of the overbought level. And this trend has been observed since the beginning of January this year. So if a pullback of the RSI towards the 50-point occurs again, it could represent further opportunities for accumulation. And that's all I have to share for this week. Do remember to like and subscribe and let us know in the comment section below which stock you would like us to analyze next. And I'll see you again next week in the next Technical Insights.